It's nice to see you on a weekend coming. We do the Right Fin Talk as a series where I love to share my experience with the customers, prospects, and personal experience, how the things is there. So we want you to not to reinvent the wheel when somebody has done it. Try to ask as many questions as you can. Our purpose of life and Right Horizon is how to make people achieve their financial goals with a peace of mind. That's what our thoughts, and we are looking forward. And these series we try to do it mainly on a personal finance. In going forward we will have different formats, because as I was talking to Madhusudan and any other questions, sometimes people says, why don't you just take the only questions and answers? We will love to have that format. If you all can give your feedbacks, what kind of seminars, what topics you want, we will be happy to have those. Maybe call Anil also if required, or we will have a third people who are prominent in that, like we may be thinking of frauds, few people on a crypto side, because suddenly after the budget crypto is becoming illegal and people are asking what are the things we can do. We wanted to do a will session. So there are different things we wanted to do on these, because these are the important part of a personal finance. So today I am planning to have a call happy retirement, and this session is always the top of my mind, because whenever I have been asking anybody what you wanted to do, so only two things people will tell me: Rachna, how to get a regular income. Because most of the time, none of us or very few of us will be having a regular income. So when we are planning to have a regular income, what comes in your mind? So if anybody can unmute and share it, it will be great. So anybody want to tell what comes in your mind of happy retirement, retirement planning, retirement? What comes in your mind? Monthly income? Anything else?
Steady,
For me, it's a
steady.
peace of mind.
Yeah, very nice. Peace of mind.
Yeah, for me, it's a steady income, allowing to do the things post retirement which we miss doing during our working days.
Perfect. Independency. Very good. Yes, thank you, Prashant. Anything else? Anybody else like to share their thought on retirement? So all are correct, and this is what we believe. So I was having one of our customer. I think so. I met 2 weeks back, and he is also very well known to us. So he asked me the question, Rachna, I don't want to use word retirement planning. So he says that retirement planning make me think that I'm becoming old. But I want to say that money works for me, I don't work for money. And it's such a beautiful phrase he told us, which we tells but we don't realize. So he says, I must been slogging till now to make sure my all the lifestyles are being taken care of, my all goals are taken care of. And as I think so Sandeep or somebody says that you like to do what you want to do irrespective of you're earning money or not. Okay. And that's where I also believe the retirement planning, I use the word retirement planning because it has been taken as that how to create an alternative income, how to make money works for you, how you can have a peace of mind, as you says, how you can have an independency that irrespective of I am working or not working, my lifestyle continue the same way. So one of my very good friend, we both were working in Wipro, and he called me long back from I think so last retirement planning I did it in October. He called me around October and he says, that's not how you can say you are retired and doing a retirement planning when you are working. And then I told him, I said, who made you to think that I am not retired? I call myself as a retired person because I do what I love to do, and I don't work for money. So if somebody asks me, I'm getting a zero salary, I'll be happy to do the same work irrespective of money. The reason is why? Because me and Anil have made that planning already, that at 35, both of us, had made the alternative income that irrespective of we work or not work, so are all goals and we will get the monthly income. Of course, we both are working so that monthly incomes are coming and we are reinvesting that. So that you have your own cautions if you want to reinvest or you can use it if you want. But yes, so it is a freedom from our thought that even if I don't work, my lifestyle and my family and my goals are being taken care. I will get a monthly income, which is inflation linked also. That is another point I want to bring it across. Most of the time when I was doing last week, another customer prospect, he is an eye specialist. He came to me and he says, Rachna, I wanted to come and meet you with my family. I said, perfectly fine, we prefer to come with the family, and we explain when we doing it's because it knows that how you have been doing. So he started, he asked me how you go about it. So I said, there are always two ways. You tell me about your family, I will tell you what service suits you the best, or you can do it other way around, that I have only this much money, let me start this and then map it to the goals later. So he says, no, I wanted to prefer to meet with the goals first and let us know how I am being fairly good or not good on my goals. So quite young doctor, around 30, 35 years, 35 I think so, and the wife is 30, 35 years old, eye specialist. And he says that, Rachna, I have one kid, so I have kids education, retirement, and the vacation. I said, fair, good. So I asked him, let us see, just to ball mark. So when I was speaking, I normally do the ball mark on spot kind of it calculation, even though I will do detailing part later. So I said, okay, how much you spend a monthly? So he told me, any guesses how much a person must have told? Anyone? Nobody has written. So, okay. So that person says, no, I think so. We will, I think so, spend around 2 lakhs. So I said, okay, fine, let me see. So I asked him, if you're spending 2 lakhs now and you wanted to retire at 55, so we will do the analysis. And I will just do this analysis as a part of this seminar. So I'm not opening that Excel. And then we went across and he says, no, I need the 2 lakhs as a constant money. So I told him, when even you are retired, your inflation will continue. So you can't get the constant money because the 2 lakhs today, after 20 years, is not equivalent to 2 lakhs. So his point was made me to think most of the time when we are trying to do retirement planning, from wherever you do yourself, you do through somebody or anybody else, they always try to do inflation link. It is better to do inflation link and try to understand whenever you are saying a household income, please remove the kids' fees and other things, because after retirement, those may not be there or your EMIs may not be there that time. So even if I do what if analysis when I'm doing retirement planning from 2 lakhs to 1.5 to 1 lakh, which I will do it, you will realize that the corpus required for that is going to be too much of difference. So please try to understand how much exactly you need. Of course, you can't change your lifestyle, but how much you really need it and household income now, then we will try to do it. So with that, I will start the retirement planning as the session where I believe that it is the best part. You all can see my slides?
No, ma'am, it's not visible. Students.
Can you see now?
Yes, ma'am, now visible.
Is it seen?
Yes, ma'am.
Okay. So I'm just trying to say happy retirement, early retirement is a very, very nice things which I have seen. We were yesterday in another things and a lot of people started saying that now we should retire by 45 or 40 and all the stuff. Why we have to work and slog so much? I always believe that before this, what you call webinar, there was a one person has come and he joined around 20 minutes before. So I said, okay, I was chit chatting with him also the same thing. I was trying to speak with few people and I felt the difference between retirement planning at 45 or retirement planning at 60 is actually nothing to do with what you means by retirement planning. I'm trying to say retirement planning at any age. I'm trying to feel that you should be in mind, peace of mind that I will get alternative income, take care of my lifestyle, and I have taken care of my all other goals. So you decide what age you require, because most of us, we are forgetting now the longevity is going much higher. 80 to 85 is a very, very common part of a retirement. So what is retirement plan? Is not what you say that, okay, I become 60, I have to chill muddy and see the TV and have the tea and coffee. Those days are gone. So indirectly, for me, retirement planning is the corpus, or the money is working for you. You are not working for money. You are working for what you love to do, but you were not able to do in the time of your corporate life or your day-to-day work. That is what is a retirement planning for me, and that's where I have been trying to drive across. Most of the time when we talk about retirement, at least my dad was in army, and for them retirement is at 60 and they will get a pension. So they didn't have and I keep teasing my dad always that you must have not earned that much of money, how much you keep getting a retirement pension, and you keep increasing DA every time, goes on and on and on also. So sometimes we never give a value to the deferred income. So that is another point of view. I always say is give importance to the deferred income. Deferred income means you are investing now. But in case if I live 25, who has to take care of me? You will surprised to know that I am sure you must have got it across in a WhatsApp that Raymond case, because I was doing a family office certification also. The people who are been doing so well and they are being a big, I can say the house, those are the people, even after having the things, they were not able to sustain, because most of the time in a family office I was doing, uh, money erodes after third generation, because they are never able to sustain that amount which has come to the next generation. So retirement planning is also, we have to think on that level. In case if I continue to be till 85, how I'm going to sustain. The good part of our generation, at least I'm talking about my generation, is I'm at 44, 48, 48 or 40s plus. I'm thinking that at least we have in a clear in our mind that we may not have to make sure that kids are going to take care of us, because we have to generate our own money, be independent ourselves, because kids are going abroad and settling and they have their own family. But how we have to make sure, so your few data points, you will realize the data doesn't say what we feel. So this is talks about very clearly, I'll just make the footing control, how this Right Horizon started. So Right Horizon started by Anil Rego, who is the founder and CEO. Good Bad Ugly, he's my husband also. So I knew him very well. So he used to tell me, because we both were in Joseph's college mates we are. So he used to always tell me, even then we have not even started working, that he wants to retire at 35. And he will say that what are the things is required. We both started working after, I think so 22, 23. We started working and make sure that we have a corpus that we will get an alternative income. Then we both used to go at so many different places and say that we need a pension plan or we need a regular income at 35. And all the people used to laugh at us because we were just 23, 24 that time. And they says there is no pension plans or no regular plan at 35. Then he started being himself as a passionate about his what you call fund management and personal finance. We made a corpus and he was able to retire at 30, because he created that much of fund 5 years in advance. And then we started. So he's the author of Honey, I Lost All Money, which is another part of it. So I normally tells my stories through the webinar, and he tells his stories of his customers through the books. So you can just have a book and it's a simple read, like a storytelling of each customer. So we don't reinvent the wheel. So similarly, there is nothing impossible now to say that I can't retire at 30 or I can't retire at 35. If we made a mind, we will be able to retire. But the reason is we have to be very disciplined investor to make sure that we able to generate that corpus, which will give us a continuously income when we get retired. Because when you are retiring, what you are going to do is very important. So it's not that he wants to retire and do nothing. So you are getting retired and he wanted to start his own company, but you don't know that company will be successful or not successful, or you don't know that company is going to give you the salary or profit or not. So you are trying to do something different. And that's where I want all of you to, I keep saying, and his first part itself says that you dream big and do what you like to do. Make sure that your retirement is the first step to make a corpus, have free to take decisions, and make sure that you achieve what you do. So this is the data which has come, I think so, January 26th, ET now. And it's again a very, very different scene if you see across. 80% is not ready for retirement. When I speak with many person, I have realized it. Those people says, no, my son and daughter will take care. I have a person who is telling, because sometimes you feel, and that's the best part of this job, I always feel how much I can help. I can try to help people. That person comes to me and says, Rachna, please try to speak with my father because he is been trading and playing around with the FNO and he lost, if I'm not wrong, I don't know, 25 lakhs or 1.25 crores. Whatever he has saved in his PF, PPF, he borrowed it and he is done, and he doesn't have, he's not able to survive even day-to-day things. So sometimes it's very, very difficult when I go and meet people. I always says, if you want to take a risk, you take a risk only for the things which, like is anyone of, I don't know if any of our customers are there, I can't see. If they have come and asked me that, Rachna, why don't you give a crypto? So I used to tell before the budget, I says it's not legal because it's not allowed. Second thing is, even if you want to take a crypto, please put the money. If it is become zero, it's not going to impact your lifestyle or your any of the goals. So sometimes when we are talking about a retirement, we also have to look at very clearly how much I can take a risk or not risk, because this retirement fund should not become zero or whatever it is. So try to see how you are, I think so, grading towards a retirement. It is 50% achievements. There is nothing wrong if we start even 10% achievement. I believe this investment is not on money, it is on our behavior and attitude. If I know I start with 5,000 rupees, I don't know when it will become 50,000 or 5 lakhs rupees. But try to have a discipline. So 80% says it's not ready. India retirement index is actually at very low, 44. And I wanted to tell you, even country like US and Australia and UK, of course, UK says we cannot manage it. So they give the pension funds back to the people. US, you try to take care of 401 depending on you. So they are not responsible. So you try to track it yourself and accordingly do. Your Australia government is trying hard because they are saying we are not able to manage. So they have made a retirement age 60 to 65. They are planning to make it 70. So that is another thought I keep thinking. In India, we are trying to say, okay, we should retire at 45, 55 and all this stuff. But other people, when I speak with US and other friends and I can say customer, they say, Rachna, if you go abroad, the people question is always, do you want to retire at 65 or 70 or 75? Because it's not so easy to sustain. And my retirement here, as I told you, it is not an age. It is the just a peace of mind to make sure the money works for you. Only 12% of an Indian force is covered under various pension schemes. That is another point of view. I always believe, and that's sometime I didn't like it, but that's the way it is, that government has made 1,800 rupees as a PF minimum, or some of the place, if you want, you don't need to pay PF. And I used to feel very bad because at least for a, I can say PF sake, we will have a 12% of a savings for a retirement. But now if I go and ask any of the youngsters or something, why don't you take an option of 12%? This is no, we wanted an in-hand salary more than the talking about. So that's another view. We have to start thinking across, making a corpus. Actually, as on today, still PF is giving you 8.5 tax free is a very, very good option. But so many companies has opted as 1800 rupees as a minimum. So that's another things. Of course, those are part of a pension system, but many people still don't have the pension system, especially the business people when I speak, because they don't come under PF and PPF. So sorry, PF and EPF. So they just go for a PPF, and PPF is limit to 1.5 lakhs. So it's not increasing, but yes, PF and PPF are good for the long term. It's still giving on tax-free things. It's very good. 7 out of 10 Indian expect the children to support for the retirement. It's very true, and the things are changing. And I believe that we should be independent ourselves to sustain our life and make sure that we have a corpus which will money works for us. Of course, the kids takes care of you. It's the best part of the, I can say it's a bonus. But if it is not, they have their own life, so they will be happy and you will be blessing them, but you will be at least financially very, very fit. Only 18% of the Indian investor think of retirement. That is the one thing I have wanted all of you. And even though I take the retirement sessions mostly within 2 to 3 months once, I always tell them whenever I ask of a retirement, they says, no, it is very far. So this person whom I was talking to the doctor, and she says, Rachna, retirement तो बहुत दूर है, मुझे तो सिर्फ पहले vacation plan ही बना दो. So I wanted a vacation every 3 to 4 years, around 5 to 6 lakhs. And this is the debate myself. I keep thinking how the trends are changing, or maybe I am very old to do the wealth management sometime, because previously 3 to 5 years back, I can tell you the vacation was always a lower priority for us. We used to say that it's a want, it's not the need. So for us, the need was like a retirement planning or a kids education planning was our, like a need is like a mandatory or must to do or to give a first priority. And vacation, we will say that, okay, if you want, if your portfolio exists, giving over and above these goals, we will try to do. But things are changing now. People are saying that retirement is a lower priority and vacation is in higher. So this is the another set of trend I have noticed last 3 to 5 years, which I don't know it is good, bad, ugly, but yes, this is, I can say it's a Western culture or the culture where in abroad it is being taken very high, that let us invest in our time in exploring and vacations and other things than thinking of a retirement. 76% of working age people in India expect comfortable retired life, but only 33%. This I wanted to tell you one more story about it. The person who told me, ki Rachna, I required Sanjay, can you mute everybody? So this person has come and told me, Rachna, I need money and I will be able to get it across. I don't know, his point was around something, it is coming 8 crore or total, and he required around 1.5 lakhs as the investments. So I said, see, the reason is, and he was okay to start with 20 to 30K. So I said, there's nothing wrong. You start with 20 to 30K and then you will, over the period you do. Then he says, no, Rachna, my lifestyle, I cannot change it. That made me to again amaze and think about it. We have to start realizing sometime what is present may not be in the future also. So please make sure how the lifestyle we can sustain. Very, very important part of it. I'm not saying that we should not spend more than 2 to 5 lakhs. But on an average, whenever I do financial planning, people will tell me around 75 to 1.5 or 2 lakhs. If somebody is telling me above 2 lakhs, that person should have, because what is happening when we talk, I'm just talking about Right Horizons customer and my customers when I speak and I hear, they normally come an aware customer about 34 to 35. They've got married, must have got kid by the time. Then they started seriously thinking, okay, I should invest for my future. So let us say 30 or 35. 35 they are coming. And most of the people will say they wanted to retire by 50 or 55. So let us say 55 also. So you have only 20 years of saving and investments. In these 20 years, that's the best of your peak in a career. You are having a happy and healthy life with a family and friends, which may have your EMIs going across, kids' education, those things going across your retirement pie. I can say it's less than 25%. So you are saving only for 20 years. And think about it, when we are doing a retirement planning, we are taking till 85 years. You are saving only 25% of your total what money requirement. Let us say you need a 1 lakh a month for next 35 years, and you are saving only 25K. So 25K you are saving for the next 20 years. But next 30 years, you expect more than a 1 lakh plus. I'm just trying to say, of course, if I do a future value of 1 lakh, it must have become 2.5 or 3 lakhs. How is it possible? So it is always good when you think a long term and power of compounding. So I will just have a part of it. Please tell me if you can able to hear this sound.
We plan and save for all our goals. But what about retirement?
92.6% of working population in India is not covered under any formal pension system.
Earning age is reduced due to increasing focus on higher education and desire to retire early. Life expectancy is increasing, and so as medical expenses. This makes the retirement planning the most crucial financial goal. Combination of SIP and SWP of mutual funds can help you to create your own retirement plan. Let's see how. If you start investing rupees 5,000 monthly at the age of 25 through an SIP in equity mutual fund, your retirement corpus would be rupees 1.54 crores. You can switch it to debt mutual fund and start an SWP. With expected return of 6% CAGR, your monthly withdrawal through SWP would be rupees 77,024. When you want to stop receiving it, you can also withdraw the entire corpus. Key to create your own pension-like monthly cash flow is to start early. If you delay your investment by even 1 year, your retirement corpus would be 1.36 crore. And monthly withdrawal amount through SWP will reduce to rupees 68,486 monthly. To receive fixed monthly cash flow after retirement, start planning for your retirement with the help of SIP and SWP now.
So this is what I was just trying to say, how starting early works faster and better. I have already spoken about Indian retirement system as from the government side is not so good. We have to make ourselves. Why retirement planning? No doubt about it. Our pension and gratuity is not sufficient enough for our lifestyle. Inflation is a very, very silent devil, I can say, which we don't do it, take care of it. Most of the time we have to make sure that what is today 1 lakh, after 20 years it may be much more money. So as we started with previously, I was just thinking, and when we go back and you ask your parents and all, most of the people will say that okay, we'll take a PF, PPF, FDs or a rental income. Okay, these are the normal thought of a pension plans, apart from if they have a government pension. So now why it was there? Because that time FDs, PF, PPF, your rental income was giving good. So it was around 10 to 12% on. Now it is not. You will surprised to know I have a few customers who are bankers and with 30 years, which who have never ever, their age is 72, 74 and all. They have not even invested in a mutual fund or anything other than an FDs. They started coming back to the FDs, moving out of the FDs, and then because they said, because I'm in a 30% bracket, my total I'm getting as of today is only 3.5 to 4%. So why don't I do that? So that is another reason I feel it. The way of thinking of a retirement is going down. Previously, last week itself, I have another customer who has taken a site, took 2 crores of loan, made 4 small apartments kind of it, and he was explaining me within a 2 years, Ki Rachna, I am not even able to net it off my rent versus my EMI. My rent was not coming because of COVID, and I don't know how to sell it. So that's another thing I have seen most of the time now. Rental yield, I'm just, yield means how much money I'm getting. I'll give you a simple example. Let us say in Bangalore, if you wanted a 2-bedroom set, it will come approximately 70 to 80 lakhs odd. And if you give it for a rent, you may get it around 20 to 25. And to 20 to 25, 2 months at least that real estate person will take, or renting will take. Whenever I have seen, my average is only 10 months rent, you get it. So if you do 25,000 odd into 10, 2.5 lakhs over 80 lakhs, you will surprised to know that you are not even getting a yield of 3%. And of course, you are paying even the interest for that. That's a different question. Then previously people used to tell Rachna, at least that appreciation is going high. So if you have taken an apartment or something which is a good area, appreciation is not going so good. If you're taking further where appreciation will do good, your rental doesn't come good. So this is the another research and the trend you can see. Whenever the GDP it goes above 3 trillion across, I'm talking about US, China, Japan, anywhere you can think of those things, the people have started moving from fixed asset to the liquid assets. And we are in that phase where people started saying, no, I don't want a fixed asset. Maximum because of emotional, I may take a self-occupied house, but I don't want it to have. I have another customer, he's very, very young, around 27, and he says, Rachna, I don't want to stick myself for a job or anything to have my self-occupied house. I just wanted to have been rented, and I'm okay to continue because it's easier for me to move across if I have another job or something. So that's another aspect of it, how these olden days of retirement funds are not working so well now, because it's not even taking care of inflation for all of us. So we talk so much about inflation, but you will surprised to know, more than inflation, actually our lifestyle has increased quite a lot. Most of us has been, I am trying to say that, gone much more beyond that. Previously, at least I'm next month is a Women's Day, and most of the time, the full March, I'll be having a lot of webinars on Women's Day. And my starting statement of a Women's Day is always the same thing: is the best wealth manager is your mom. So please call your mom and learn from them. That's the best person than me or anybody else. Because I have seen my mom, I have seen many people, including self, they never spend what was not planned. And it was very, very clear that how I can, though it is less, being a mother of 2 teenagers, I have noticed very clearly they will buy it, and suddenly after 2-3 months when I'm cleaning the rack, I said, you have not even worn. No, there was no occasion, so I didn't wear it. So now I don't feel like it is good. It is, style is gone. So let us have the next thing. So please try to understand, whenever you are taking care, that inflation is one part, lifestyle is another part. So please make sure that you have household income taking care of your lifestyle, not only the inflation part of it. Why retirement planning? Very, very important. Interest rates are going down, fixed rates are not doing good. So normally you should have a combination of both, which I'm going to explain. Longer lifespan increasing. I was talking to yesterday Dr. Anthony Pius. He's been an oncologist, psychic hospital, and he was trying to say, nowadays, Rachna, I have been doing this for very long, and average person is staying above 85 as a middle class and above. So I was telling 85 and above. I said, no, it's we should, as per normal thing as lifespan as for India, it's going as a 67 to 68. So he says, no, those are the different statistics. Just look at around. So I want all of you to think about whenever you're talking about longevity, it is a genetics, if it is not a certain event. So you will realize it, your mother side or any of your grannies or something, state 85 or 90. That is the your genetic lifespan it is. And that's where you should take care of your retirement plan till then. Medical facilities are very, very costly. It is impacting quite high on overall level. Joint families become nuclear families. Lifestyle has become very high expenses. I was just talking to one young couple and I was telling, oh, it's like becoming like a Thailand, Singapore or what? Because they said, we don't have a kitchen in my house. And I said, wow, I never knew that 3 times meal on 365 days you eat out. So he says, yeah, we are very used to because we both are working. And I was keep thinking this quite a lot, that things are changing. And that's where we have to make sure that we need to take care of us, not somebody else. Pillar for the journey is always first comes the family. They are the one person who is going to take care in a retirement. Finance is the next part of it. Whenever we have a financial backup, I can tell you, even it's our son, daughter, or ourselves, the power of independence, you have it in your mind, is amazing. Somebody asked me, Rachna, how you know you have money before you search? Because 99.9% I don't see my bank, and actually it's been taken care by our accounts team. They know their my username, password. I have to ask them most of the time if I have to do something. Anyway, I don't do much of the my bank. So this is how you know you will be spending money. Is there enough or not? I said, first of all, I am, my people says I'm a miser or conjuice, but whenever I spend, I knew that at least that much money will be there in the bank to take care of it. I never have people tease me. My husband also tease me that I never sees that what is the cost or the behind what is the tag. If I like it, I take it. But I can tell you the independence comes in my mind is very good because you are sure. It's not that I go to the like a quite a big shopping or something. I do very, very less shopping, and I keep myself only a very clear slab that above this I will not buy it. It can be gifts. Normally I buy gifts or the books kind of things. Not, I mean, I'm not a person who spend on clothing or the jewelry kind of it. My expenditure is always on the books most of the time, and kids some things. But I can tell you that independence giving to you what you have comfort in your finances too good. So try to have that freedom. And that's where we had a just walking group talking about how somebody knows that you are happy. So they were saying that the best part of the things to know that you are happy is you get sleep within a 2 minutes, you lie down on the bed. So I was telling that's a very nice way of somebody explaining me what is the happiness part of it. So that's a part of a readiness, finance, freedom. These are the three things very much required as an health wise, or I can say wealth wise, to have a peace of mind. Of course, to create those things, we should know how much we can take risk, how much we are ready to take care of our retirement and other things, and risk and returns. Because so many times we don't realize it. So we have in our Right Horizon do have our own PMS, and we have been doing quite fairly good in the last 2 years, ranking top 2 in the all over India level. So it's been going between 54 to 128 returns also. And sometime I get a call because my number is on website for the assistance and call. When I get a call, people expect the same thing, and they says, Rachna, I need your fund and I expect 30% and 40% return. And I always tell them, and I have losing many customers for that, or maybe prospect, saying that please don't expect the same return what we have given last 2 years to the next 20 years or next 5 or 8 years. Because on an average, they're saying, no, you have been giving, or you give me the highest customer or whatever is the highest risk portfolio, and I get it across. So people's expectation is 30 and 40% returns. Okay. And I want you to tell yourself, I don't know about others, a best returns. I love research, I love reading. And I can tell you, you do the rolling return, financial year return, annualized return, XIRR, whatever return you do it for last 30 years, the large cap or a Nifty has not crossed more than 14 to 15, 14 and a half, 14.8 in any rolling returns or anything. And small and mid cap has gone 16 to 18%. So I keep telling, be realistic. It's better for me to have a continuity, because we believe when I'm taking a customer, it's not only taking a customer, it's a family. Next generation also will be taking care. So it's better to understand the risk before you are doing. Doesn't need that highest risk is always higher returns. So that is another fundamental I wanted you to understand. Please don't look at short term. Another, I think so, last presentation I have told you, there's a customer who said that they showed only the 1 year return 21% or 28% returns, and then it went negative and she was very wild. So my belief is, I always says, look at long term, look the things as per your goals, and then go for it. It is like when you are going to, let us say, here to Delhi, you always try to see the ticket till Delhi. You don't see that, okay, that train was going to Jammu Kashmir, why I didn't go to Jammu Kashmir? Because your destination was in Delhi only. So let us look what is your destination, what you're going for, and what you're happy with. I don't bother about what others are doing and they are doing. So this is the another typical fear and greed. It happens. That's a part of an emotions. But yes, try to understand your risk and returns perspective. So I'll just take these part of it as my Excel. So please let me know if you're able to see my Excel. Can you see?
No, ma'am.
So it is a simple Excel I'm showing how your monthly expense can change. So can you see, or you want me to increase a little bit more? Is it?
We can see, ma'am.
Can see?
Yes.
So I am trying to say, I'm talking about myself only. Let us say 75,000. I'm at 48. I want to retire at 60. So 75,000 rupees will be equal to 1.68, or you can say 1.7 lakhs. So when I am 60, I have to plan around 1.7 lakhs rupees to be getting per month basis. Okay. So this is the first point I always try to explain people to. Whenever we do today's value, we take care of a future value. So I just wanted to see how this formula works. There is nothing rocket science about it.
Sorry for inconvenience, everyone. I think she is having network issue. She will be joined.
Hello.
Yes, ma'am.
Yeah.
Yes,
Sorry.
ma'am. We can hear.
I'm sorry. So I was talking about the Excel, and I was trying to say how this function called future value works. So today's my future value is, I'm trying to say, for 75,000 rupees of today's value after 12 years, how much it will be. So I've just taken a 7% odd and inflation. I am taking across the 60 minus 48 around 12 years. Today's rate is present value, PV is present value, 75,000. So I need a 1.7 lakhs. So this is the part I am trying to say, when I have to retire, I need a 1.7 lakhs. I want you to see, I'm saying about that, how this corpus creation has been derived. So it's called real rate of return divided by 12, because you need a monthly income of 1.7 lakhs, or I need a 1.7 lakhs. I need 85 years minus 60 into 12, which is 12 years into 12. And how much per month I require when I'm retiring? I'm required 1.6 crore, 1.6 lakhs. So if I have to get equivalent of, I'm using the word called equivalent here, equivalent of 75K of today from 61th year, till 85 years, I should have a corpus of 5.4 crore when I'm 60. To achieve that 5.4 crore, either if I have a 1.7 crores now, I will be able to achieve, or if I do investment per year basis 22 lakhs, I will be able to achieve, or monthly 1.86. Of course, in this is the ball mark because I have not added whatever past investment I have been done already. Okay. So this can be, you can play around. Sanjay, when you are sending, please send this Excel to everybody, and they can play around with easily how much money they require as on today, when they want to retire, and how much corpus they do. Okay, this will be easily helping you out to say that how you are achieving into your retirement goals. So when I'm back to the PPT, can you see my PPT?
Yes, ma'am, we can see that.
Yeah. So how to achieve? I have been doing the same thing. It's a simple and systematic. I feel that discipline, long lasting, makes much more better thing. Have a patience. I am sure when FDs you have invested, you must have never gone and checked the bank is exist in that place or not. Okay. So similarly, when you are buying a systematic things, you don't have to check every day or monthly or something. Of course, you should have access. You should have a transparency to see what is happening. It is in your account and everything. Have once in a quarter or a half yearly. Normally, people do half yearly time to see how the portfolio is working. But have the long-term, simple and systematic investment plans. Asset allocation, very important part, as I told you. In retirement planning, there are two ways to look at. One is creating of a corpus and another one is managing the corpus. So today I'm doing a creation of a corpus. So creation of the corpus, you should do a little bit higher risks where you can create a more corpus, because when you retire, we will go into the lower risk. So the next session I may have it, how to manage post-retirement a corpus cash flows. Okay. So that's where we will see that how your debt and equity ratio, the debt equity is anything which doesn't have a market link. Easier way for understanding debt is where you have a fixed returns. You're sure the market goes up or not, a war comes or not, you will get that much of money. That be sure of it. That is what I keep saying people, whenever this fixed pension plan comes, keep that much is because at least that will take care of your basic amenities. Then rest, the other corpus will create a wealth creation. So best way of to understand the debt and equity is 100 minus your age till you're working. That's the best part of it. Time, very important. So another customer, I made a cash flow because he was not able to take care. He wanted a 2 lakhs. So what he says, Rachna, I may not be required that much money, inflation linked and all. So what I will do it, I will take 2 lakhs for 5 years. Then I will add 25,000 more. 2.25 lakhs for the next 5 years. So we didn't do the inflation linked full till 85. We did in a phase manner, increasing on that part of it. So that you can, and we can do a customization for a lot of time, but make sure you are taking care of a phase manner, withdrawal plans and other things. Measure and calculate risk and returns. I have already spoken about. That's very important part of it. So I'll just have the smaller video.
Chinese bamboo is the world's tallest grass, which goes up to as high as 80 to 90 feet in a little over 5 years. When you sow the seed and start watering and nurturing it daily, you don't see it growing for 5 years. It would be frustrating, isn't it? But wait, miracle happens after 5 years. It grows from 0 to 80 feet in less than 90 days. Similarly, growing wealth through SIP also requires a lot of patience. Had you started an SIP of rupees 10,000 in September 2010 in large cap fund, the value of your total investment of 3.6 lakh rupees would have been 3.57 lakh rupees after 3 years. Had you stopped an SIP, this temporary loss would have been permanent loss. But had you continued an SIP at the end of the 4th year, your value of total investment of 4.8 lakh rupees would have been 6.95 lakh rupees. And if your SIP still continues till March 2019, the value of total investment of rupees 10.3 lakhs would have been 17.38 lakh rupees. Remember, correction is temporary, growth is permanent. So continue your SIP for long term to create wealth.
Mutual fund investments.
So I have already shown my calculation. So I will be going and showing you what is the importance of asset allocation. Make sure that it reduces the volatility and superior returns. So make sure that you have equity and debt. Look for the long term. Remove the emotions whenever you are doing investments. Please don't do that. I have tried doing it sometimes when we are having a first car and all the stuff, and it didn't work for it. So please make sure don't do the emotional linked investments. Don't say because it's my uncle is telling, my auntie is telling, my friend is told, and all this stuff, so I should do it. Lot of time it's been coming across that Rachna, my uncle has told. So I always tell, this is what is my analysis says, and rest decision is yours because it's your money, but you have to decide. It maybe something is good for your friend, may not be good for you. So please try not to have an emotion linked in that. Try to have the, whenever you're doing retirement planning, fixed returns perspective around 2/3. Indirectly, 2/3 is taking care of a good wealth, and 1/3. So if it is 100 rupees, you just let us say like a 30,000 rupees, you put it in a debt side, or which is giving you the good, I can say, fixed income plans. Again, I wanted to give a caution. Don't go for a pension and annuity plans. Pension and annuity plans are taxable. Nowadays, there are many plans are coming, which is called monthly income, regular income, and all the stuff, where you pay 5 years, 8 years, 10 years, and then you get fixed income. Those are tax free. Go for those if you're taking care of the debt side. Otherwise, you can have a good bonds also part of it. With this, I conclude my retirement planning webinar, and I'll be happy to have any questions.
Ma'am, we have some question in chat box.
Yeah. What should be preferred, large cap or a mid cap? So you should come take care of most of the time diversified both. So if somebody comes and tell me even for a 10,000 rupees, what should be the SIP? So I usually give a large, mid and small one, and balance and multi cap. So I do most of the time. So we prefer to have both of them. But yes, I think so. Mid and small still have a rally for 1 to 2 more years. But in the longer run, multi and the large is a better option with a lesser risk. And 1 minute, I am not able to do. I have joined late due to a variable reason. Yes, we will be sending you the webinar links and the things. I request everybody, if you can, just give your feedback and others, it will be great. I'm assuming Sanjay is sending the video and the feedback links. Then stock market at all-time high. What will be the advice in PMS? SIP work wonder. So, Mr. Mark, actually, I always say this: it's high or low when you compared with something. So I can tell you, within last 2 years back, nobody knew that we will reach 61. Okay, I have a customer at COVID March 2020. He says that's now market will go even to the, I'm talking about Sensex, even 10,000. So it's always a comparison. What we are comparing with. Yes, market is overvalued. We expect a volatility, and that's where either a mutual fund house or a PMS house, they will take care of the strategy, which is called the core or the satellite. Core is where they take care of the long-term calls around 3 years plus, and satellite as per technicals and others. That's the way we take care. So I always believe when you do an investment on a regular basis, do with an SIP. When you have a lump sum, PMS is a good option. Then Ritu has written, okay, webinar. Then Galaxy, somebody has joined. Can you give the recording? Yes, we will. Calculation also we will be sending across. I don't have any other questions. I have answered. Mr. Prashant, is it the right time to start SIP? Anytime you can start SIP. I have been doing SIP for 26 years. I can be a testimony, and it's the best time or any time, because it takes care of an averaging. Lump sum investment, if it is a big, you can do PMS. Otherwise, do it in mutual fund through the STP. Any other questions I have?
Ma'am, we have two more questions.
People feel ashamed of talking. So yes, I can understand. You can write my email and number, Sanjay, and you can call me anytime. In case if I'm not able to call, I can tell you one thing, I will 100% call back. But yes, when I have a meeting or webinars or something, I don't pick the phone. But you can call me anytime, anyone, because my intention is always to help people. Is PMS investments are too costly? It depends on what, because even in mutual funds or a PMS, most of the time fund management charges are the similar. Yes, doctor. Yes, Dr. Madhuri, I think so. You have a questions. I was just trying to say PMS and mutual fund, both the side, your expenses are the same. So depending also the PMS is the one more good thing is you have an option on direct, you have an option on performance driven, you have an option fixed, which is not there in a mutual fund. So from customer perspective, the cost for mutual fund equity and PMS equity is a similar. Please
Madam,
do
you
post.
mentioned.
Yes, Arun, tell me.
Yeah. Madam, you mentioned about right. So some plans which goes for 5 years or 8 years, which is tax free.
Yeah.
Would you be able to shed some light around that? What sort of investments you're talking about, which are tax free and which can be invested?
As on today, we being doing insurance also, but I'm saying you can do the search. Anybody, it's called the monthly income plans. Okay. So what, as on today, I can say I have seen the best, even though it is insurance, I still look at IRR or XIRR. So what happens? They are paid for 5 years, depending on your age. I normally give a recommendation for 10 years is the best XIRR. That's why. But if the age is above 50, they will take 5 or 8 years. So what they do it, you have to pay 5 years or 8 years. And after 1 year or 2 years, you will get the fixed pension for the next 10 years. So as on today, Exide, Tata, ICICI, HDFC, these 4 people have the fixed pension plan, which is above 5.8 to 6.4 range. So depending on, you can do the analysis or you can ask us, we will give that 4 illustration. What feel you comfortable, take the next IRR. So another learning I have done last month is when I was speaking with another person and she says, Rachna, I have a 30 lakhs of insurance, and I was very surprised, what 30 lakhs insurance you have? And then I realized it, the most of the time when people talk about insurance, they talk only on the sum assured. When I talk, because I'm talking as a part of an investment, I'm not talking about my life cover. When I'm talking about life cover, I'll talk about sum assured as a term cover. But these funds I'm taking as a retirement, so I still do the XIRR. Because few things people comes to me, this fund, I don't want to name it Excel, but they said this fund is giving me 8% or 10%. And I'm very good in concept. So I said, please send me the illustration. So what they do it, I have paid now, let me see, one time now. And my deferred plan starts after 5 years or 10 years. So 10th year, you are getting a 10% returns. But if I do XIRR first 9 years, it is coming to 5.4%. So be careful what the illustration says. If you want, next time I will teach you how to do XIRR also in my next cash flow session. So try to understand 5.5 and 6 to 6.2% returns, which is tax free, still very, very good. You can do any research across the globe. Nobody is going to give you the almost 9% return for 25 years. So these are the funds. If you still want an exact illustration, you please write a mail to me. I will send you the illustration and you can buy wherever you want. Yeah, Ms. Dr. Madhuri, please tell me, you have put the hands up. Can you hear me, sir? Yeah.
Yeah. I can hear you. Right. So there are also some corporate bonds which gives us a yield of 9% or so. Do you recommend any stable bond where and also a tax-free one in the long term?
You can just give me your email ID. I will send it. There are bonds which is gone to 10, but we don't recommend anything below AA+. Okay. I'm not saying that AA plus is above has not become negative, but in a past once or twice has become. But AA minus onwards is very, very risky. So we normally give AA plus, and AA plus is coming approximately 7.5 to 8%. Okay, we will send it to you, the bonds. The bonds is another good way to look at. You can just think, because the bond maturity is coming around 8 to 10 years, which is also one way of going good. Please tell the XIRR and PMS. Yeah, XIRR or PMS is indirectly the word, you can say CAGR, XIRR, year-on-year returns is the same words. I mean to say that year-on-year returns on a PMS, even though it has been doing amazingly good, again, I'm saying it for the last 2 years, but expectation always you should have it on a portfolio around 14 to 15% for the large cap or a multi-cap, and a small and mid cap is around 16 to 18% returns. Am I answered you? Yes, Dr. Madhuri and Eddie, if you can have a queries, please unmute and write.
Yeah,
Okay.
yeah, madam, I have a query. Yes, in your presentation, you showed SWP to do it in debt. If you do it in equity, then the return will be higher, isn't it? Or what was your background for choosing debt for SWP? This is, I want to clarify.
So what happens whenever we do the growth, we go to the equity, whenever the payouts happen, we do to the debt. The reason is, when the payout is happening, we don't want to impact your goals. Okay, so when I do a cash flow, I may have a 5 asset allocations, I may have a balance fund, I may have equity, I may have everything. But when I'm paying to you, I cannot say that no, I cannot pay because market is down. Am I right? So whenever the payout happens, we will move those funds, at least minimum 3 years or 2 years funds, in a debt funds, which is not market linked. And from there, SWP happens. So the normal cash flow is always on the same way. Payouts always happen to the fixed funds where it is not impacted by the market. So what that video was trying to say, you create the SIP, create the bigger corpus through the equity funds, move it to the debt funds and do the SWP whenever required. If you don't want SWP, you can take the lump sum money. Am I answered your query?
Yeah. Thank you very much. Thank you.
Okay. Yeah, Mr. Madhuri, any questions more, Sanjay, in the list?
Hello, Rachna.
Yeah.
Rachna, in your presentation, you just calculate the inflation 7%.
Yeah.
But really, the economic is 7% and lifestyle is 12%. Then why you calculate 7%?
That's the reason I told you that when we are doing, we take only inflation, but lifestyle is much, much bigger. So if I do, the lifestyle will be bigger. So you will surprise you again, it's emotion. If I do a 12% inflation, my none of the funds which is giving me 12% risk free. Okay. Then we will never say, okay, I have to make 14 crores or 30 crores where I will make a money, not happens. Because as we grow higher, our lifestyles mostly will sustain the same or goes low. So most of the time, I always believe whatever is your lifestyle today will continue the same way. So you have taken care of a lifestyle, household income as on today. So that I have been taking care of it. But yes, there is nothing wrong to take in a higher things. So in the slide, I told the lifestyle is bigger. But yes, if you want, we can make a cash flow with the lifestyle also. But most of the time, we take with the inflation linked.
Another thing, ma'am.
Yes, Jay, tell me.
Another thing, in your last week session and previous session, we did not recommend crypto.
Pardon?
In last week session and previous sessions, you never recommend crypto.
Yeah, we still don't recommend because it was not been legal by the Indian government and the SEBI advisor. In this budget, the RBI and the government has made it as a legal now. So we have started doing the research and we will come back with the webinar and our recommendations also. We have not yet started sending our recommendation because we have to understand there are different ways the crypto people can invest through directly, indirectly, and other ways. Okay. So till February 1st, it was not legal only in India. Now it's become illegal.
Hi, Rachna.
Yeah.
This is Madhu here. Just to correct, don't mistake me. I think the FM very clearly made it other day, Nirmala Sitharaman, that it is not legal. The correct word she used was it's taxable. What is taxable doesn't mean it's legal. I think a lot of people misunderstand legal.
What Madhu, it's what she is telling. It's not called a currency. It's a digital assets. So they are saying you can buy a digital assets as a currency or whatever word you use for crypto for 30%. So previously they were not even allowing us to, as a SEBI advisor, to recommend. Now, as per SEBI regulation, we can recommend.
Yeah, that's clear. But then there is no legality here. That's what I wanted to just highlight.
Yeah, so it may be true because previously, even for me, legal means is a compliance. I mean, previously, if any SEBI person has recommended and they come to know, they can take our license. Okay, as a compliance, we were not allowed. Now, as a compliance, we were allowed.
Yeah, because even online lottery, you play and you pay 30%. It is not legal actually. Yeah, it's taxable. So you can't run away with the profit.
I was trying to say as a compliance perspective before, maybe they're not a right word as a legal. Yeah. So now as a SEBI advisor, they are allowed to do recommendation if they want on a crypto. We are still doing the research. We have not yet given. So we will also try to have one session on those who are in, I'm saying the person who has been in crypto or been doing crypto quite a lot of things. They will try to bring it because we are not the right person. Yes. Isn't I answered
Madam, in today's,
yeah. Yeah, Arun?
Yeah, so in today's macroeconomic outlook, where it is all negative with all the war-related aspects that are going on, so what I'm looking for is very conservative instrument rather than linked to all this stock market, Nifty, all these things, right? So what would you consider if we are looking for a conservative instrument like bonds, anything other than bonds and pension funds, anything else that we are looking for, any sort of avenues where the person can invest and with no risk-free appetite?
See, risk-free, let me show you the screen. Can you see my screen? You're able to see the screen?
Yeah, I can. Yeah.
So this is another screen which I normally show, but I didn't have a time, so I just kept it. These are called fixed returns and these are called non-fixed. So you are talking about fixed returns, okay? So fixed returns is what which they tell it in advance only how much returns you will be getting and what is the duration, like a FDs, okay? So post office schemes, it can be a GPO, you can have NSCs and other things, MIS. PF, PPF and bonds, which is another one. Traditional insurance is another one. These are the four things you can think about how it's been. So as on today, if you do PPF is good, bonds are doing good. Traditional insurance, which is giving you regular payout for the deferred not endowment plans, are doing good. FDs and NSCs post-tax is not been doing good. Okay, so these are the fixed return perspective, which will be the other part of it. A lot of time people have told me, why don't you think the gold and the real estate also will be the good things? But whenever I have done the gold and the real estate, I can say year on year returns, you will surprise to know, which is another presentation. I will show you the graph on assets. It's very, very, very low. So most of the time, if you wanted to have a liquid funds, those are the better way of doing. So a lot of time, if you don't want a bonds, there are mutual funds which invest only on the government bonds. That's also you can take one key for the long. That's also another way to take a debt funds or a mutual funds which is investing in the bonds. I got another question, how PMS work? The PMS works the same way as your mutual fund. Only the difference is mutual fund have the units and NAV kind of it, because they do the pool of money and then they buy the stocks as per the objectives. Here they have a minimum of 50 lakhs to take care of it. So I think so the two questions I answered together, which talks about minimum of PMS and the PMS. Any other questions? If anybody have, I'll be happy to answer.
Yeah, the problem with SIPs, what I've noticed over a period of time is that whenever the market falls, and if you have the SIP configured, say, let's say in the beginning of the month, and if the market has fallen during the mid of the month, right, you're always catching up with that, right? So and it's not smart enough that you want to invest only when the market is fallen, right? That's where you make a lot of money over a period of time. So right now it's not smart enough, and whenever the market has fallen, that's when we have to invest more. So with that logic, does the SIP interval has to be very smart enough to have some indicators so that we could invest smartly when it is down?
I'll give answer in two ways. One is SIP. Most of the time, I believe it's not the date; it is an averaging. We are doing it for a longer term, so that works. But what happens on exactly most of the time we say is one SIP you do it in a debt. Okay, so that will take care of a contingency plan. It may take care of the when the market falls, you just switch it off. Most of the time, that's what we do for all our customers. We must have kept it for them for a contingency, and we ask them, market has fallen, can I move it? Yes, that's another way. But most of the time, if you are very disciplined, a lot of people do that. Because salary comes and a lot of people says that's not salary. If it is there in the bank, I may use it. So they take the days between 1 to 10 when they're doing SIP. But SIP days are there till like it's if in 1, 5, 7, 10, 15, 20, 25. These are the SIP days. So a lot of people whom I have seen nowadays, if they have 4 SIP, let us say 10,000 each, they may pick 1, 5, 10, 15, 25. So that's another way of doing an SIP days. So you have a weekly thing. Otherwise, the best way, I always believe simplicity is the best. Do SIPs on whatever days you feel comfortable. So it doesn't have a insufficient fund, because insufficient fund comes, it's a reactivation of SIP comes, and you may have a, I think so, bank charges 200, 400, I don't know what, depending on the bank, that also comes. So what I always tell to the customer, do SIP in first 10 days when you're feeling comfortable. Put a money, maybe 1 lakh or 2 lakhs or something. Do SWP, STP, weekly basis. And that's what it's taken care of both the ways. Am I answered your query, Arun?
Yep.
Thank you. Any other questions we have, Sanjay? Yeah, Prashant has asked which is the best recommended instrument to park contingency fund or emergency money for time being. I always believe the liquid funds or a debt funds are the best way to take care of it. And for an emotional perspective, I say is contingency plans, you keep it in your FDs. So the reason I'm saying it, because it's for a contingency not more than 5 to 6 lakhs. Two reasons, because sometimes these are linked to your ATMs also. So in case if it is a holiday or Saturday, Sunday, and you wanted to withdraw, you are able to do that. But otherwise, you won't be able to do that, because for anything we need a market or the things to be taken care. So personally, I always says for a contingency, if you're okay, keep it even 3 to 5 lakhs in an FDs and feel comfortable. For retirement, will SWP will be better than the pension dividend? Yes, SWP. As I told you, even including me and Anil, we are been getting monthly income plans. 1/3 of the money is coming from there, which is 60K comes to us for both of us already from 35 onwards. And others we can do SWP. So we don't need a money now. So we are now doing SWP, and we're creating a corpus on a equity side as of today, because we both are working. But yes, it's a combination of you should have SWP and you should take care of through the pension plans or the fixed annuity. So when we do a cash flow, which is the next one, so if I need a 1 lakh now, next year is 1,06,000 and 1,12,000. So first we will minus your pension coming, and the rest of the money we do the SWP. So because SWP, we can change the variable anytime. Retirement pension dividend. Yes, Prashant recommending I did that. Any comments on decoding medical amount selection? I am not sure that question. If Prashant, you can tell me, you're talking at how much medical cover you should take? If that is the question, I always says minimum you should take 10 to 15 lakhs, because family floating in the last 2 years, we realize people have crossed 10 to 15 years lakhs of that. But I personally feel this is what I have done. When we cross 25 lakhs and 50 lakhs, you will realize that amount is too negligible in the premium. So till 10 to 15 is the highest. So even if you are okay with having a higher, do a 25, which is the most peace of mind. But minimum you should have 15 lakhs for a family floater. Please, please do take care alternative than corporate also. This is the another thing. I have been going for a lot of corporates with the inductions and others. They don't take it. And when they are out with 45 or whatever age, they are not getting a good medical cover. Please do that. That's all from my side. It's a wonderful weekend. Have a great time. Stay safe. Be happy. Enjoy yourself. We'll be here if in case any help you required. Sanjay will send it to you, the video and the recording of this. And I request if you can just send me one-to-one or tell us your feedback. We'll be happy to do that. Thanks a lot. Bye-bye.
Madam,
Madam,
yeah.
I would
Yes,
like
tell me.
Yeah, one last thing, right? So if you can cover in the next session how the retired employees can engage to generate a passive income or
Yes,
a active
I'm
income.
going to do that with the post-retirement with the cash flow. Yes, that's my next session.
Thanks.
So, thank you everyone for joining us. I will be sending the recording and we'll send a link. You can put your topic if you want us to know, conduct the sessions. Also, we will be having next webinar on spotlighting best performing mid-cap fund of 2021. So that we'll share the details about that also. We would be grateful if you can put your thoughts about this session on chat box. Thank you. Thank you everyone.
Thank you. Bye-bye.